My guest today is Chris Solarz. He is the Chief Investment Officer of Digital Assets at Amitis Capital, where he runs a fund of funds, basically picking the best digital asset hedge fund managers in the world. Prior, he spent his career in traditional finance, including allocating nearly $8 billion as a managing director for the consulting firm Cliffwater. He's a CFA, SDPA, and a CAIA. This is episode 40, titled Digital Assets, the Tokenization of Everything. Let's get into it. Great to have you on the show, Chris.
Hi, Joe. Great to be here.
So, what are you most excited about within the digital assets ecosystem?
Wow, jumping right in. So if I take a tiny step back, like it has been a whirlwind since I left traditional finance and traditional hedge funds about 4 to 5 years ago and entered the world of digital assets. And digital assets means so many things. There are so many subsectors. One categorization is Bitcoin and everything else. And that everything else is a huge can of worms that encompasses NFTs and gaming and meme coins and a lot of projects that have perhaps gone nowhere. And there's a lot of things that are going somewhere and perhaps building the backbone of the financial system. So to your question, what is most exciting to me right now? It's real world assets. It's the tokenization of equities and real world assets. And, would love to explore that with you and your listeners.
Yeah, for sure. And, we started off, and you're right, I went right in there. We still want to get to the exciting parts.
Yeah.
Digital assets. I opened with what is most exciting about digital assets. I feel like a few years ago, I would have opened with what is the most exciting within the crypto world.
Yeah.
And explain to me why that's an old statement and why everyone should just move away from the crypto world definition of this ecosystem.
I think crypto and digital assets and blockchain in a large way are synonymous. People use them, they interchange these words. I think institutions and institutionalization has kind of adopted digital assets, right? For better or for worse, crypto is now associated with this last decade, which has included a lot of gambling and scams and frankly, unscrupulous bullshit. And I think where we are right now, it's this next decade is going to be defined by institutional adoption of digital assets. Maybe it was a use case, like a proof of point. Trading all these meme coins, trading all these NFTs over the past decade proved that blockchain technology is cheaper and faster and more efficient than legacy systems, kind of a proof of concept. But where we are right now, and happy to dive into this, you see adoption across the board from the institutional space, which is really exciting. We're really at the precipice of this growth of institutionalization in this asset class.
Okay, so I want to get into real world assets and tokenization, but let me define the way I see. You mentioned crypto and blockchain, and I want to make the distinction and define them and see if I got it right, because I think it'll help hopefully everyone. It'll help me for sure. So yeah. You mentioned crypto, and crypto is a currency, and it's a method to potentially pay for something. It may pay for a blockchain, it may pay for multitudes of things, but it's a coin, and we're going to put that to one side. Blockchain is the technology.
Right.
And that technology, it's kind of like, I'll say it's verification technology, but within that verification, you can also do things. I'll call it a smart contract. If this person's verified, then they own this house, or they could buy this house, or whatever, right? And so, are those the two building blocks that we're kind of going to use, and maybe we'll end up in real world assets real world tokenization, and real world digital assets? Those are both using blockchain technology. Is that right? Or
yeah, this is all right, and it is complicated. Even for me, it can certainly get complicated. But you're right that behind the scenes, blockchain is the technology. That's what we're all excited about. Crypto are tokens that represent each of these blockchains. And just like a token at an arcade, you need to, pay that token to be able to play the game or use the protocol. So the crypto tokens themselves are really just ways to pay for usage on the blockchain, which, for better or for worse, we could call a open architecture database. And that helps with verification, because anyone around the world with a computer can verify that these transactions that are happening on the blockchain are open and transparent, and confirm them. So this is kind of the cycle of, I don't know, perhaps the integration of the crypto tokens and the blockchain technology, but they really are synonymous.
Okay, so let's get into it. Explain tokenization and why we're excited about it.
Cool. Well, when I first started reading about crypto over 10 years ago, this was always one of the biggest selling points, is that we could tokenize anything. In fact, the catchphrase is, anything that can be tokenized will be tokenized. And to a large part, I think half of this has been true. The pushback would be, just because it's tokenized and liquid doesn't mean there is liquidity behind it.
Right, but what does tokenized mean? You're saying
Sure.
you could tokenize anything. What do you what does that even mean?
What does that even mean? Okay, let's start from there. It really means having a liquid token, having a representation of an asset that you can trade. So a token of real world assets could be a tokenized version of equities, which is off the charts right now. It's going gangbusters all over the world, because for the first time, non-US people can access tech stocks. So people all over the world have been able to buy SpaceX, NVIDIA, Micron. I think we kind of have this privilege here in the US to think, I can do it through my Schwab account. I can do it through my TD Ameritrade account. But half of the world doesn't have access to these securities. So tokenization of equities, for example, is an exciting story there. But it doesn't just stop and end there. You can tokenize fixed income, and that's what BlackRock's Biddle fund has done. So you can buy a token that represents U.S. Treasuries, essentially, and get paid a few percent from the roughly 4%, 3.5% that you can get from the risk-free rate there. Yeah.
Yeah, let's use that as an example. Well, I want to go into both. So I tokenize a treasury.
Mm-hmm.
Let's just say a 1-year treasury bill, whatever you want to call it. Okay, note. And in the old world system, I go on. Actually, let's use it as an equity. Then we go to fixed income. I think they're both the same. But the old world system, I go onto my Schwab account, let's say, and I go buy $10,000 worth of NVIDIA. And it shows up in my account, and now I own $10,000 of NVIDIA.
Right.
Now, instead, what am I doing in the tokenized version to get hold of that NVIDIA?
Right. Well, maybe I can start there, because I think we take for granted all of the middlemen that are built up into that trade, right? Like, you certainly simplified it, and it is that simple effectively for us. But when we go onto Charles Schwab and we place that order, it then gets routed to maybe to one of the exchanges, or maybe to Citadel or a dark pool as an intermediary. There are market makers. When it gets settled, it has to get settled on DTCC. And there's a couple other intermediaries that take their pound of flesh, right?
So can I interject there for a second?
Yeah.
I started my career on the American Stock Exchange.
Yeah.
So I was a market maker. And if someone wanted to make a trade, they'd run in and they'd say, hey, I want to buy 1,000 NVIDIA. We were doing options, but it's the same thing. And then that broker would write down, because there's still paper, write down the names of who did it.
Yep.
It would settle in a couple of days because you needed time.
Yep.
The next day, when I started the job, I was a clerk. I would go into a big, miserable room somewhere on the exchange called the DK room, which is the don't know room. And at night, all these different places would go and kind of align on what kind of matched up and what didn't.
Yeah.
And the next day, I'd stay in one place. All the brokers would run around and be like, "Do you know this trade? Because I have you on this trade." And I'd be like, "I know this trade," or "I don't know this trade," or whatever. And eventually, it would clear, and it goes through a centralized system. And so I just figured I'd interject with a personal story on like how all of this works, right? And then you have to pull money in. Um, and so, meaning that the person who bought the NVIDIA has to actually send money in before settlement, and there's all these steps involved. So go ahead, Chris.
And do you feel that was a very inefficient system?
It was inefficient. I'm sure it's more efficient nowadays than it was back then, but still, we moved from T+2 to T+1, which means now it takes a day
Right.
to settle instead of 2 days to settle, because you need to verify and make sure everything's kind of matched up properly and the money's there.
Right. And often these redundancies are built in on purpose. But I think if we reconstructed the financial system from scratch today, it would look a little more like decentralized finance than this kind of antiquated piecemeal way of having all these other, confirmations along the way. So in the brilliance of DeFi is that a trade is instantaneously settled peer to peer. I can send you one Bitcoin from my wallet to your wallet. It doesn't go through any banks, and the trade is the settlement, right? That it's instantaneously settled. So the two things are, it's peer to peer. It's 24/7. We don't have to. There's no banking holidays. Instantaneous settlement. And then the other thing that's quite interesting is if we are able to tokenize these assets, then we can borrow and lend and expand credit in a very interesting way. Like right now, I have assets that are not considered for, when I want to buy a house. Why couldn't I borrow, again, used collateral that I have in a certain account as collateral to take out a loan? I think that's another really interesting way to, in a healthy way, to expand the credit in the economy.
Yeah, but going back for a minute, it's so interesting, and I want to get into like that element of it, of all these potential benefits. But before we even get there, stepping back for a minute. So now, in the old world system, which we're still in 90% of, I go out to Schwab, I buy NVIDIA. In the new world, I still want a marketplace, right? Because if I just trade with you, like, I guess we have to agree on the price. That would not be efficient. But what is the new world? Am I still going on to Schwab, Robinhood, wherever, and saying, I want to buy NVIDIA, but instead of buying it in the old school ticker way, I'm buying a tokenized version, which is which is, I want to be careful here. It's not a representation. It's literally the same thing. It's that stock certificate that I'm buying, right? But it's a tokenized version of it. Is that right? Is that the way to think about it?
Well, just like any good answer, it's a little bit complicated.
Okay.
There are two ways to do it. These tokenized equities are done in two ways. Coinbase does it how you're thinking. They hold the stock, they tokenize it so that it truly represents the fraction that they have in their qualified custodian. The way that Binance and Hyperliquid and a lot of other exchanges have done it, they've created a derivative called a perp, a perpetual future. And that's what has really gone gangbusters right now, trading all over the world. People are trading perps that represent SpaceX. And then you'll say, well, if you can't actually trade, then how does it actually reference, the underlying? Well, that's where some arbitrageurs come in. And of course, there's always going to be at the margin, problems with any derivative. But in general, there's been this huge liquidity and influx into these synthetic tokens that represent these underlying equities in the US. That's been the most exciting thing, like probably over the past 6 to 12 months, I would say.
Okay, interesting. And so those, I think just for this conversation, I'm very interested in that. Again, I was an options guy, so forwards, futures, all that stuff makes a lot of sense. Um, but I think I want to stay away from it gets complex really quick, and perps will get complex really quick, but the perps are a little different. At the end of the day, holding something like that is very different than holding the underlying security. The mechanics and the financing
That's right.
and all that is just it's just different because you're pricing something in the future which has to do with interest rates and borrow rates and all sorts of other elements that I don't even want to go into. But going back to the first step,
Yeah.
the real answer, if you want to just go and buy a security, that's it. I'm a simple guy. I want to own some tech stocks as we start this conversation. One way to do it, which is the current way that most people do it, is go on and buy the security. The other way to do it is to buy um, to buy a tokenized security. And now the benefit of the tokenized security is A, I get that security right away. B, it seems like I could, you're saying I don't want to say, I don't want to use regulation. You'll correct me here. But if I'm sitting in Australia or Thailand or anywhere in the world, I could still go on and just buy that NVIDIA and I own it. Now,
That's right.
and you're saying it sits in my wallet? Where does it sit at
It
that
sits in your
point?
wallet. Exactly right.
Okay.
So, I think one of the big benefits of good crypto, I would say, good digital assets, is that it allows for increased ownership, all over the world. So it is very simple. And this is hard we haven't got into the can of worms of what Bitcoin is, what it represents, and how it's kind of the first peer-to-peer money. But all of crypto kind of has this representation of peer-to-peer. And I think it's always hard for Americans to truly appreciate being in control of their own money because we trust our financial system. For the most part, we all trust it. If you ask someone from, I don't know, Greece or Cyprus during the European crisis in 2011 or so, they weren't able to get money out of their own checking account. There's a famous story 2 or 3 years ago of a guy in Lebanon during the Lebanese banking crisis who went in to rob the bank of his own money. He said, please, he had a gun and he said, I want my $300 out. And then you just think about the banking crises in Argentina that's happened seemingly, 2 or 3 times every decade or so. So like for us, we really trust our financial system because we have perhaps the exorbitant privilege of having the reserve currency of the world. But for everyone else, that's kind of one of my favorite. This is what got me into it, kind of like the just understanding the perspective of everyone else around the world who perhaps needs this access and doesn't have it the way that we do.
Yeah, and I appreciate that. It's another rabbit hole, and again, we'll probably have to have you back. Because the rabbit hole is a society kind of needs, or is it, if you're gonna have a governed society, hopefully where society gets to choose who governs it, it makes sense to control some element of, or have the capability to control some element of the currency to do all sorts of things with. And you're right. It seems like a lot of countries do a poor job of that. And then, and then it just comes down to right. How do we want to govern money moving in and out? How does it affect? So I know people have all those sorts of controls, but kind of going back to NVIDIA, I guess if you're international, I mean, we have a whole ADR system to buy international securities.
Yeah.
So you can't just literally easily buy international securities, but nowadays you could go and you could buy a fund that is institutional that is able to do it. So there's like a lot of regulation kind of built up around all this. And I guess the point is on tokenization, it's a potential way to kind of create, I'll call it a global exchange in order to access any securities that are tokenized all over the world. Is that so? So on one way, it's better access, and another way, it's immediate settlement
Yep.
with verification. And I'll talk a little bit about so this is decentralized, and so my again, you could correct me where I'm wrong because I could easily be wrong here. But decentralized, there's basically an algo, like there's some proof that needs to be done.
Yep.
And so the way is that some proof needs to be done. And so some party needs to verify, they get compensated something, and then it's all transparent on a chain. So it's almost so there should be no broken part of that chain. And so and that should allow for an auditable, transparent, verified
Yeah.
system. Is that, did I kind of get that right? It was probably pretty clunky because I'm not perfect. If you want, you could correct my English there. But is that the idea? Is that it's totally decentralized? Someone matches. Go ahead. Sorry. Mm.
No, that's exactly right. Like, I think, again, going back to our financial system, I was, back in 2008, I was working as a fund of funds investor. And, the 2008 crisis was very, very meaningful for really, it was the birth of digital asset industry. And this decentralization kind of came from that. But, we had the collapse of Bear Stearns, and they got bailed out, and we had the collapse of Lehman, and they didn't, right? It was very, very arbitrary. And you just think about that, like the purpose of decentralization is that it's your money in your wallet. You control those keys, and you don't have to trust any financial institution. And the history of financial institutions have ultimately been one failure after another. Sometimes they're saved, sometimes they're socialized, and sometimes they're not. And you think about like the central banks and banks all around the world, like in the US, we probably have the best rule of law, and we have perhaps the best history of success with our financial system, especially with FDIC insurance. But in general, like it's a very spotty history where is leading to debasement of the fiat currencies, et cetera. So I think that's kind of the impetus for like being in control, being your own bank of sorts.
I got you. But that's if you literally hold it in your wallet.
Right.
And so that means that you're trusting one person. It's the equivalent of like digging a hole in your backyard and burying the gold. And
It's true.
so outside that, you just need institutions, and then you have humans. And
You're right.
I don't know what AI is going to do, but like we've had all these blow ups within the digital assets ecosystem or the
It's
crypto
true.
ecosystem as well. So anytime you just bring us humans in there, it messes something up. Um, but I hear, so it's always just an argument over, how to protect it. But I do want to kind of go back
Yeah.
to, the benefits, because I think it's really interesting. Maybe at some other point we'll go, because it may be too boring of a conversation of, okay, the pricing mechanism and the settlement and everything. I'm very comfortable viewing that because it's decentralized, you have competition, and as long as competition is relatively pure, you should be able to get very good pricing. And then you kind of come back to this whole world of, okay, you get free trading on Charles Schwab. Why is that? Well, because, you could do the same thing with tokenization. So let's throw that whole conversation out. And then what we come to, so far we've had two advantages, and I want to kind of go down some of the others because there's got to be more behind it. So advantage number one is instant clearing, instant settling. Right. Instant settling means that, by the way, if you want to sell something, you don't have to wait a day or two to get your cash. You could just use it right away.
That's right.
So that's pretty cool. It creates more efficiencies. Item number two is perhaps globalization. I'm curious about that because, there may be regulation that pops up, but let's just say for now it's instant, it's verified. You can trade it anywhere in the world. Talk to me a little bit more. I kind of stopped you earlier in the conversation in terms of where else one could go in terms of being able to leverage or all these other benefits that may come off tokenization. Give me like the top three benefits, if you got three.
Of the decentralized of digital assets in general.
So real world, yeah, tokenizing or or digitizing real world assets.
Yeah, I think. Look, I think the three big ones we've talked about it is peer-to-peer, peer-to-peer settlement, which then disintermediates all of these rent takers that are sitting in between. It's kind of a simplification of the financial system. So I think that for me was what interested me the most and kind of got me down this rabbit hole. So number one, peer-to-peer. Number two, as you say, 24/7 instantaneous settlement. That's much more efficient use of resources. And then the third could be cross collateral efficiency, right? If you imagine you had a wallet that really represented all of your assets, Joe, your house, all your retirement accounts, your brokerage accounts, your house, your car, and your boat, right? All of that is in one wallet. You could borrow and lend much more seamlessly against this. And in a lot of ways, DeFi is a set of building blocks of using collateral for different types of borrowing and lending. So that's another rabbit hole to go down. But I think perhaps my third favorite selling point would probably be cross collateral efficiency.
Okay, great. And give us, before we kind of move on from this, my understanding is that tokenization has been growing in leaps and bounds.
Yeah.
Can you put some metrics around that? Just how fast is this piece of the world growing?
Yeah. So maybe my first talking point I should mention is Larry Fink is all in on tokenization, right? He has said many times that we're at the beginning of the tokenization of all assets. And, BlackRock's the biggest asset manager in the world. And, they're not going into an industry if it doesn't have a $1 trillion total addressable market, right? So number one, we got the biggest asset manager in the world on board. Number two, Jamie Dimon, of arguably the most important investment bank in the world, he had been very bearish on digital assets. And for the same reasons I have been, like, there was a lot of scams and gambling and fraud and meme coins that kind of obfuscated the fact that there is a very small percentage of these tokens that actually are going to change the world. He's now fully on board, right, as well. So you got the biggest asset manager, the biggest investment bank. You've got both the heads of the SEC and the CFTC who have said that tokenization is here to stay, and things will happen a lot quicker than we expect. So right now, if you just to put some numbers on it, I think tokenization of equities is still only a few $billion, right? All of the tokenization of real world assets is about 30 billion. And that number, and by the way, like Citigroup has this famous report. They say that in just by 2030, tokenized assets will be about 5 trillion, from 30 billion to 5 trillion. And how do we get there? It's tokenization. We see right now, we see Visa and MasterCard and DTCC, Western Union, every single big bank and financial institution is throwing their hat in the ring. They know that this is that this is a cheaper. First of all, they can just follow the money. It's cheaper for them to settle on blockchain. It's faster. So all of these, all of these attributes kind of can accrue to their legacy system as well. I think we talk about two things. I'm kind of talking about the beauty of the theoretical peer-to-peer transactions, but the truth is it's going to be a little more murky, where the old line businesses, the big $1 trillion enterprises are adopting this technology, and that will be the kind of the backbone of the financial system. That's the way I see it.
Got you. Okay. And talk to us a bit about what's most concerning within this ecosystem, where people should kind of stay away or be careful.
Yeah, we kind of touched on this before. Like, I've always cringed at at meme coins, for example. Like, I think they perhaps did prove that we can do, billions of dollars of settlement. People love to speculate. Like,
So
just
the meme, sorry to interrupt. So meme coin like Dogecoin,
Dogecoin.
Dogecoin's a meme coin, right?
Dogecoin's a meme coin. The Trump and Melania coins were famously the Trump coin was the biggest meme coin. It got to a $78 billion market cap.
Okay.
And it's down 99% since then.
Okay.
Right. So who gets rich in these? It's just about, it's about eyeballs. It's about people are buying into them, and then the early adopters are selling. So it's just about the attention economy. Like, for this 1 week or this 1 month, there's different memes. I get it. It's kind of fun to trade them, but it's just like going into a casino in Vegas. Like, you are the sucker. Like, there's 1 or 2 people who win in Vegas, and there's like 99 people who lose. And if you do it for entertainment purposes, then that's great. But if you actually think that it's a business or it's an investment, it certainly is not. So, I've long said that 99% of these tokens will be worthless. And actually, I think it's 99.99. And just to put some numbers on this, Joe, I think it's interesting. Like, the fact that it's so permissionless, it means anyone can go into the source code of Bitcoin and basically do Control C, Control V, and copy all of the back end. That's what Dogecoin was. That's what Litecoin is. At the time, it was just a fork off of the Bitcoin source code. Now, Bitcoin has 300 million people around the world who believe in it. It's got institutions like BlackRock who are behind it. We could make the Obsidian coin tomorrow based off of the exact code of Bitcoin, except it won't have 300 million people who are supporting it around the world. And it doesn't have, a 17-year head start like Bitcoin does. So anyone can go in and make any coin, which is why these meme coins are proliferating. There's virtually no reason to, there's no barrier to entry. And at their peak, we were minting like 50 to 60,000 new meme coins every day. And that's more than the number of equities listed in every market in all 200 countries around the world. So there's like 60 million tokens that have been minted at this point, 60 million. So the number that are actually going to be successful and change the world are a few dozen. There's a lot of crap going on.
I mean, it's interesting. Back in the, I think it was 1800s here. I mean, banks did issue currency, and then at some point we just created one. So your thesis is that you're going to have Bitcoin, Ethereum, a few others that have some functional use or role in society. That functional use may just be as a store of wealth, let's just say. I don't know if Bitcoin, like, do you have a view? Is Bitcoin digital gold? Is Bitcoin a dollar? Or is Bitcoin just something different and we shouldn't try to compare it to anything?
Right. Well, I think this is a good way to differentiate Bitcoin and everything else. Right now, I think Bitcoin's best use case is that store of value. As we see, our national debt is about to knock down, about to build up to $40 trillion. We're constantly debasing our currency in the US and around the world. So for me, I see it as digital gold. I think it has the potential to be a lot more than that. But right now, I think it's fair to call it a digital gold. It's not a currency because it's not being used as such. It's being used as a store of wealth, a volatile store of wealth for sure, but a store of wealth nevertheless. The interesting part about, like we talked about smart contracts, is that these tokens can also basically represent equity in very good new decentralized businesses. And the quick example I'd like to give you there is Hyperliquid is a decentralized exchange. It was programmed by, call it, a dozen people, and what it does is it matches buyers and sellers in a peer-to-peer way, in a decentralized way where anyone can basically list any type of asset. And to make to make it oversimplified, the fees are very cheap, and the protocol itself runs itself. So the small fees, the trading fees, what they do is they use that to buy back their token, and they have over, call it almost $1 billion in revenue, and they're constantly buying back their token the way that, share buybacks are. So you have the earnings per share, the earnings are stable, the shares are going down, the revenue basically per token goes up. And this is one of the best businesses and a very good example of that's a token. You want to own that token, because if they keep buying back these tokens, eventually there's going to be, no tokens left. There's going to be one token left. And all of the value of this this $1 billion of revenue per year is going to accumulate to the few tokens that are left. That's why this is, this token is up, 100% this year. It's really, really taken off on the back of real world assets, which are going from something like $30 billion to, call it, $5 trillion by the end of this decade.
Okay. And so just summing it up, most excited about tokenization, digitizing real world assets, be aware of most tokens and all this gamification stuff that we started off with. NFTs is a great example of that, and kind of stay away from that world. Did I summarize that right?
Yeah.
Okay. So now, Amitis, did I get that right? Did I pronounce it right?
That's right.
Okay. Amitis Capital is your fund, Chris.
That's right.
Explain to us what you do at Amitis Capital.
Oh, sure. So Amitis is a family office. It's a London-based family office, big into digital assets and emerging tech. And the family office started maybe 8 or 9 years ago. And when I met up with the founders about 3 years ago, we put together a business investing in managers focused on digital assets. And our idea really was to be kind of like a OCIO of sorts, to give access to institutions to everything digital assets, because there are so many ways to get access to this ecosystem. You could buy and hold Bitcoin or Ethereum. There are active managers, and that's my background is 20 some years investing in actively managed strategies. And you can imagine, with the inefficiencies of this new market, there is, first mover advantage alpha to be had on the active management side. And there's also a lot of venture investments as well. So putting all of this together was kind of our original idea. And we built a fund of funds. We've invested in probably 20 different managers trading many different strategies. And then on the back of that, we're now building an SMA business as well, because this is a whole nother can of worms, but it's a very efficient way to get trading strategies from many managers and teams around the world that are not running commingled funds, and having a little more control over the fund itself. So there's a lot of exciting things that we're doing, but I think the best way to think of us is a digital assets asset manager.
Okay, and tell us, you kind of mentioned, right, it's still a very inefficient world, so there's potential for alpha. Explain some of the strategies that maybe are most interesting to you guys right now. Are these basically hedge fund strategies within the digital world, or maybe that's the best way to define it, but maybe go one level, if you don't mind, for one or two, just to put a little bit more flesh on it.
Sure. I'm a consultant at heart. And I worked at Cliffwater for 11 years, where we are a big institutional consultant on behalf of public pension funds. And, we make very nice PowerPoint presentations and try to categorize the whole world in a perhaps oversimplified way. So I took this approach to digital assets, and I think there are three main sleeves of potential active investments. I kind of mentioned liquid market neutral, liquid directional. Those are like long short equity strategies, essentially. They can be directional or they can be dynamic. And then third would be venture. So over my time, I've probably met now over 850 dedicated crypto strategies. And I would say roughly they fit into one of these three buckets, a third, a third, a third. So perhaps I've met 300 market neutral, 300 directional, 300 venture. Just in general, these are kind of big strokes. Within market neutral, a lot of it ports very cleanly from the hedge fund world. So if you think about the Capulas of the world who are doing fixed income arbitrage, so they're doing cash futures basis trading on treasuries, this is alive and well in digital assets. They're doing funding rate trades. Also, the CME has futures on Bitcoin and Ethereum. So you can do a Bitcoin, Ethereum spot futures trade. It doesn't even matter that the underlying reference is digital assets. It's basically the same thing as the old world, the traditional world. And you go down the line. Another bucket I have is statistical arbitrage, basically pairs trading using quant strategies. They look very, very similar to what they look like in my old world. And in fact, a lot of the traders who are now in digital assets were big traders at Bluecrest or some other, or Two Sigma. So they're just kind of using what they've used. You also have volatility arb. This would really be your world, and we can talk about that. But options now. There's a huge new market for options on digital assets, and specifically, increasingly, options on IBIT, the BlackRock ETF that represents Bitcoin. So I've kind of thrown a lot at you there, Joe, but there are, and we haven't even talked about DeFi. There are DeFi lending and borrowing strategies. So all of this, my idea is really to try to cherry pick the best managers from all of these strategies and put them together such that 1 + 1 = 3, because we have, robustness from independent alpha sources, and we put it all together. That's kind of the idea of Amitis.
Yeah, that's great. I mean, ultimately, all the strategies you mentioned, they represent strategies that you have in what I'll just term, quote unquote, the mainstream world, like what has built up over time. And so you take these strategies, you port them over, it makes a ton of sense. And then because you're still in this Wild West early stage of development, there should be more opportunity, but there's also a lot more risk. And that's where Chris, Amitis comes in, right? For that sort of thing. If our listeners kind of want to stay up, we'll put a link to you in the notes, Chris. But stay up on the digital assets ecosystem. What are the best 1 or 2 places to kind of go to best understand and kind of follow the space as it develops?
Wow.
Is there like an ETF.com of this world, or?
There is a lot of different stuff going on. Let me think about this. But in general, if anyone's interested, I'm very happy. I write a monthly newsletter, a monthly chart book, host a quarterly webinar. So I try to do a lot of educational updates as well. For a broader perspective, I think it's quite fun. I follow something called Milk Road, MILK Road. I think they put out a fun daily email and also a weekly version. There's a lot of different podcasts. I think Andreessen Horowitz, A16Z, does a lot of great research. And increasingly, I'm seeing a lot of sell-side research. So I get a lot of dailies, weeklies from strategists at Fidelity, Standard Chartered, and increasingly it's being covered by traditional Wall Street.
Yeah, well, that's great, Chris. It was great having you on today. Thanks for coming on the show.
Thank you, Joe. Anytime. Great to see you.
That's it for this episode of Investment Wars. We're not here to chase narratives. We're here to challenge them, because better investing is not about having the loudest opinion. It's about having the clearest process. Subscribe on YouTube, Apple Podcasts, and Spotify so you don't miss an episode. And if you're a financial advisor, check out our companion show, Advisor Wars, where we tackle the business of advice. Topics like alternative investments, taxes, AI, and cash management. Obsidian CIO sponsors the podcast to further educate and provide critical thinking about the factors that affect markets and investing. The podcast does not provide investment advice. Investment advice is offered only to clients of Obsidian CIO who have entered into an advisory agreement with whom Obsidian CIO has identified individual objectives, risk tolerance, and other investment needs. Thank you.